Hey everyone, and welcome back. Today we're doing a deep dive on Galectin Therapeutics Inc. GALT, for short.
Oh yeah, GALT.
To figure out if this biotech company is actually a good investment or not.
Interesting.
We'll be looking at their business model, their financials, and how the market feels about them.
Sounds good.
And by the end, you'll have a better idea of whether GALT is worth the risk.
Risk, okay.
Especially in light of a recent move by one of their biggest investors, which we'll talk about a little later.
All right, I'm intrigued. Galectin's pretty unique in the biotech space.
Right. They're not just pumping out generic drugs.
No.
They're still in the clinical stage, meaning they're researching and developing their products. They're focused on finding new therapies for fibrotic diseases and cancer.
A lot of companies are doing that.
Yeah, but they're approaching it from a different angle.
Oh, okay, how so?
Well, their whole approach centers around galectin proteins,
Galectin proteins?
specifically one called Galectin-3.
Okay.
It's basically a sticky protein that plays a role in inflammation and the development of fibrosis and even tumors. Jollity's idea is that if you can block this protein, you can maybe stop these diseases from progressing.
Interesting approach, targeting Galectin-3.
Yeah, and here's the really interesting part. They're using plants to create their drug candidates.
Plants, like natural sources.
Exactly. Harnessing the power of nature to fight serious diseases.
Wow, that's pretty innovative. Could be a game changer in terms of cost and sustainability compared to traditional methods.
Absolutely. Now, their main product candidate is called belapectin, and it's currently in clinical trials for NASH cirrhosis.
NASH cirrhosis, isn't that a pretty serious liver disease?
It is, and it affects millions of people worldwide.
Millions.
Yeah, over 115 million globally. And the current treatment options are limited and super expensive.
Yeah.
So if belapectin is successful, GALT could be looking at a huge opportunity.
Makes sense. Big market, big potential.
But there's one important thing to remember. GALT doesn't have any products bringing in revenue right now.
Ah, so they're still in the red.
They are. Still in the research and development phase, which means they're spending a lot of money.
Yeah, that's definitely something investors need to consider. How are they funding their operations?
They're relying on things like equity financing and collaborations to keep things running, which adds another layer of risk.
I see.
So let's pretend we're evaluating Jolty's management team. What would we be looking for?
First thing I'd want to know is how experienced is the team, and are they committed to seeing this through? They have a small team, only about 14 employees, which might make it hard to manage a complex drug development process.
That's a good point.
But the CEO, Joel Lewis, seems really dedicated to the NASH cirrhosis program.
Yeah, and then you have Richard Woodline, the chairman. He's been a big financial backer providing credit facilities, which seems like a good thing.
It is, but it also means Jolty's pretty reliant on one person for funding, which could be risky.
Yeah, definitely a double-edged sword. All right, let's talk numbers.
Okay, hit me.
Jolty's current market cap is around $88.48 million, and their stock is trading at about $1.30.
And what about their price-to-earnings ratio?
You won't find one because they haven't made a profit yet.
Still in the red.
Exactly. Typical for a clinical stage biotech company. And that's why their stock price is so volatile, it's been all over the place.
Up and down, up and down.
Exactly. But there is some good news. Jolty's stock price jumped over 94% from its 52-week low.
Wow, that's a big jump. What happened?
They had some positive news from a clinical trial, but the overall financial picture is still a bit shaky. They'll need more funding to continue their research.
That makes sense. So we've got a company with a promising approach to treating serious diseases, but their finances are a bit iffy.
Yeah, in the second half of this deep dive, we'll look at how the market views GALT, that interesting move by their big investor, and whether the potential reward outweighs the risk.
It's a wild ride, that's for sure. Lots of potential, but always a lot of risk in the biotech world.
Speaking of risk, let's see what the market thinks of GALT. There was that news about belapectin showing promise in reducing varices in those NASH cirrhosis patients.
Yeah.
Sounds good, right?
It's definitely encouraging, but it's important to look at it in context.
Okay. How so?
While they did see some reduction in those enlarged veins in the esophagus, the phase 3 MS trial actually missed its primary endpoint.
So even with the good news, it wasn't a complete success.
Right. It didn't hit the main goal they were measuring.
So what are people saying about GALT? The bulls and the bears.
It's pretty divided. The bulls are excited about the potential, especially with that varices data. They think GALT could be a real disruptor if they play their cards right.
Okay.
They believe the current stock price is way too low for the potential upside.
And the bears, what's their take?
They're more cautious, pointing to that missed primary endpoint.
Uh-huh.
And they see the lack of revenue and reliance on outside funding as big warning signs. For them, the risk outweighs the potential reward, at least for now.
There's a high-stakes game with strong opinions on both sides. Now, remember that big investor move we mentioned?
Oh, yeah, that was interesting.
Let's break that down. So, GALT has some big names invested, like Vanguard and BlackRock.
Mm-hmm.
But 10X Fund LP, which used to be a major shareholder, just converted all their Series B convertible preferred stock to common stock.
Yeah, that definitely got people talking. Convertible preferred stock gives you you can convert to common stock at a certain price.
Right.
But 10X Fund decided to go all in on common stock. They basically doubled down on GALT.
So what does that tell us? Is it a good sign or something else?
It could be a bit of both. It might mean 10X Fund sees real potential in GALT in the long term, despite the recent setbacks. Maybe they think the company is undervalued right now and they're hoping for big gains down the road.
So they see something that others don't.
Possibly. But there's another side to this. When they converted to common stock, 10X Fund gave up some rights and privileges that came with the preferred stock.
Oh, okay.
So this could also be a way to reduce their risk, especially with all the uncertainty surrounding GALT.
It's like we're trying to read their mind a little bit.
Yeah.
To get a clearer picture, let's do a SWOT analysis.
Good idea.
For those who aren't familiar, SWOT stands for strengths, weaknesses, opportunities, and threats.
Classic way to look at a company's position.
So starting with strengths, Jolti's unique technology using carbohydrates and their focus on plant-based approaches are big pluses.
Definitely sets them apart.
And they have an experienced management team with a history of getting through clinical trials.
Important factors for sure.
Plus, they're targeting a huge market with belapectin, which has had a good safety record in those trials.
All good things. But on the flip side, Jolti's lack of revenue and the reliance on outside funding are big weaknesses.
Yeah, those are some roadblocks they'll need to overcome.
And those clinical trial results, while not a complete failure, have made people a bit uncertain.
Okay, so some potential and some challenges. What about opportunities? What does GALT have going for them?
Well, if belapectin works and they get regulatory approval, they could be the first to market with a treatment for NASH cirrhosis.
That'd be a huge advantage.
It would. They'd have a real edge in a very big market. That first mover advantage could be extremely valuable.
First to market is usually a good thing. What about threats? What should GALT be worried about?
The biotech industry is super competitive.
Yeah.
There are other companies working on similar things, and some of them have more resources or are moving faster. Plus, there's always the regulatory hurdles to consider, and GALT needs to find more funding to survive.
So it's a mix of possibilities and hurdles for them. But let's go back to that move by 10X Fund.
Yeah.
Could that tell us something about GALT's future? It really is a balancing act, isn't it?
Yeah.
Lots of potential, but lots of questions too.
That's GALT in a nutshell. They've got a good story, but their future hinges on a lot of moving parts.
Like trying to solve a puzzle without all the pieces. So let's see if we can put it together. We know that a lot rides on belapectin. What should we be watching for in the coming months?
We'll keep an eye out for that 36-month treatment data from the Navigate trial.
That's the long-term data, right?
Exactly. It could give us a much better idea of how well belapectin works and how safe it is. That could really influence the market and even the regulators.
So it could be a make or break moment for GALT.
Yeah.
What about the financial side of things? What should investors be looking at?
Well, they'll need more money to keep going and to keep those clinical trials moving forward.
Right. Makes sense.
So pay attention to any announcements about new partnerships, collaborations, or new funding deals. That'll tell us a lot about their chances of staying in the game.
Okay, so the Navigate data and their financial moves are the key things to watch. But let's go back to 10X Fund.
Oh yeah, that was a bold move.
What do you think it means for GALT's future?
It's hard to say for sure. It's a gamble. They've put more on the line. By converting to common stock, they've increased their potential gains, but also their potential losses. It tells me they really believe in GALT over the long haul.
But it's still a risk.
A big one.
So the big question is GALT a buy?
Yeah, that's what everyone wants to know.
What do you think?
It really comes down to your own risk tolerance and your investment strategy. If you're okay with high risk, high reward, and you believe in GALT's vision, it might be worth a shot.
Okay.
But if you prefer safer investments with a clearer path to profitability, then GALT might not be the right choice.
So it's a judgment call. Everyone needs to do their own research before investing. And of course, this deep dive is just for informational purposes. It's not financial advice.
Exactly. All investments come with risk. And just because something performed well in the past doesn't mean it'll do the same in the future. Do your research, maybe talk to a financial advisor, and make decisions that work for your own financial goals.
So there you have it. We've looked at GALT's business, their finances, what the market thinks, and that intriguing move by 10X Fund. We've given you the pieces. Now it's up to you to decide what it all means.
The biotech world is full of these kinds of stories, companies that could change medicine as we know it, but also face huge challenges.
It's exciting and a little nerve-wracking all at the same time. Well, if you enjoyed this deep dive and want to explore more investment opportunities, make sure to subscribe to the Stock Analytics AI YouTube channel. We'll be back with more deep dives, breaking down complex topics and helping you make sense of the financial world.
And if you have any suggestions for companies you'd like us to cover next, let us know in the comments. We always love hearing from our viewers.
Until next time, happy investing, everyone.